welcome to this eVisors webinar on stock pitches, interviewing for sales and trading hedge funds and research options. My name is Frederick Moreau. I'm going to be the moderator for this webinar today. We are thrilled to have James Aldige with us. James is currently an analyst at Tiger Eye Capital, and on eVisors, James is available to help you with admissions and grad school advice and with advice on careers in finance. Before Tiger Eye, James got his MBA from Harvard Business School, worked at Merrill Lynch for 4 years as an analyst and an associate, and got an MPhil at Oxford and his bachelor's degree at the University of Virginia. Without further ado, I would like to turn it over to James.
Great. Thanks, Frederick, and thanks to all of you for joining. I really appreciate you taking the time and hope this is a helpful session. If we just go ahead and start with the slides. Fred already gave a great introduction, pretty much covered my background, which you have here. And basically, I was going to talk to you today kind of under the assumption that most of you are students, either undergraduate or business school students, and most of my expertise would pertain, to the U.S. hiring market, although most of the points are pretty applicable to Europe and Asia as well. So first, I was going to talk a little bit about just the industry in general. As you probably are aware, the industry is very fragmented in terms of the number of firms and the hiring process. It's not like when you're an undergraduate and looking at an investment banking job where there may be, 10 to 20 firms that you could possibly interview with. In the investment management world, there are literally thousands of firms, and they're all different shapes and sizes. And that's actually an important part of the process that you'll want to think about what kind of firm really fits with your, your career path and the way you operate, whether it's a big firm or a small firm, or what kind of team you'll be working in. In general, the jobs tend to look for people who have previous finance experience, but it's not always the case. And certainly, if you're in certain non-business degree programs or bring an interesting angle to the table, you'll actually have, in some ways, a better shot than the more traditional banking and consulting jobs. If you really utilize your network and find someone who's just willing to take someone who's smart and hungry, and you can demonstrate you have the horsepower for the job. So in terms of looking, the investment banks all have pretty large investment management divisions, so that's definitely a place to start. Then there is a big group of long-only mutual funds. You've probably heard most of these names: Fidelity, Wellington, T. Rowe Price, who recruit a lot of people and have very good training programs where you'll learn a ton and you'll have significant resources at your disposal. And then there's this group of very fragmented smaller firms. And some of them have been around for 40 years, some of them have been around for 5 years, and they really vary in terms of pretty much everything: size, compensation, industry focus. So that's where you'll just sort of need to network with your peers and talk to people in the industry as much as you can. I've listed some other funds there that you may be aware of, and I'll try and point you to some resources later. So the things people look for when hiring are pretty varied. I was trying to think through, what are just the basics traits that everyone needs to demonstrate, though. Because investment management is really, in a lot of ways, a lot more art than science. You can draw on a really wide range of skills and expertise. If you're a doctor or a biochem major, you could specialize in pharmaceutical stocks, or that's just one example. And no real major or background is necessarily better than the other. In general, though, firms will want to see that you have some sort of finance background, or at least comfort with financial markets and a passion for markets, a comfort with math and accounting. And if you haven't sort of had any exposure to financial modeling, you'll want to start trying to do that, which you can get through business schools or some online classes or other ways, but you need to be pretty comfortable with Excel at a minimum. And then, like any job, you'll need strong communication skills, and really it's a matter of being able to take pretty complex ideas and trying to put them into concise thesis statements is a big part of the job. So in terms of researching the industry and companies, these are pretty basic pointers, but you'll just want to make reading the financial press part of your daily and weekly routine. I listed some other periodicals that you can try, some blogs here, and then a number of books that I found useful throughout the process. And they're pretty widely read and widely recommended amongst people in the industry. It's really an industry that you'll need to network a lot for. Places are small, they hire idiosyncratically, they may hire one person every 3 years, and you just never know where that next lead is going to come from. Most of the people I know have not gotten their jobs through formal channels, through formal on-campus traditional recruiting. So you really need to get out there and just send as many emails as you can, try and research the firms as much as possible, and do all the things that I'm sure you all know how to do in terms of networking. The other thing is just try to be conscious when you're just living your everyday life of thinking about things from a sort of analytical business perspective and evaluating business models. So, I just listed a couple of examples here, but when you're walking by a red box or you're walking by a zip car, just think about the logical conclusions in your mind of how that business generates a revenue, what its costs are, who its competitors might be, why it might be changing, why people might not understand what's changing. I mean, that's really the core of what investment managers try to do. So the interview process is, I would say this would be kind of the typical process. It can be a couple of rounds or multiple rounds. In general, there's not a high degree of standardization. It's not like private equity where, you'll generally have sort of a case study and a modeling test. It's not like banking where, we'll have kind of the standard multi-rounds with different levels within the bank and brain teasers and things like that. It could be any or all of the above. The first round is generally in the firm's office. Either on campus or in the firm's office, and will be with usually a junior or mid-level analyst. And typically, in my experience, it'll last about 30 minutes, and you'll get the typical behavioral questions, maybe some brain teasers like you would on any job. Sometimes, in a later round, you may be asked to take an IQ test. There's not really anything you can do to prepare for it, so don't let it worry you. You may be asked to do a financial modeling test, although, like I said, it's not as common as in private equity. But then the meat of the interview is typically a stock pitch, and so we'll talk about that more in the presentation. And then later, if you're called back, you'll generally go to the firm's headquarters, meet with more of the team, maybe meet with the founder, depending on how big the firm is. And it's really, especially at a place that there are only 10 to 20 investment professionals, you're really going to be evaluated for your fit with the firm. I mean, they've already probably decided that you have the analytical horsepower to do the job, and it's really a lot about, do they think that you fit in with the organization they're trying to build. And so for that, you generally want to have few stock pitches ready, probably a different company than you pitched in the first round, although if you're interviewing with someone else, you can reuse that first one, but it's best to have a few. So then we'll get to the stock pitch. So what exactly is a stock pitch? for those who might not know. It's generally, you can define it in various ways, but for an interview purpose, it's typically a 10 to 15-minute discussion out of that 30-minute interview about a specific public company that tries to answer the following basic questions, which is why is the stock price right now higher or lower than really what it should be given the intrinsic value of the company? And then what are some things that over time are going to cause the convergence of that value to what you think is the intrinsic value? And those are generally referred to as catalysts. So really the first 2 to 3 minutes could kind of be, in a way, an introduction or an elevator pitch, and it should lay out your overall thesis. So usually you're allowed to bring in notes. People don't really mind. You should try to have the main story down in your head and not try to read from them. And also just have, you don't need to know every minute detail about the company, but you should know some basic financial ratios that I've listed. What I found helpful is basically to have it all on a one-page sheet where kind of at the top you have your thesis, some catalysts, maybe a timeline and some risks that you think to the investment, your price targets, and some of these various financial metrics and your financial forecasts for the business. And that way you can kind of glance down, if you're asked a question later and you have it in the minutes leading up, it's kind of a last-minute reminder. And so after you've done that 2 to 3 first minute, those first 3 minutes of pitching your idea, then you'll generally have a discussion with the person sitting across the table from you. So it's going to be a Q&A where they're, depending on the person, they may try and poke holes in your thesis. They may be pretty aggressive, or it may just be more trying to learn, what exactly does this business do? Why, what kind of research have you done to back up your assumptions? And, I would recommend if you don't know the answer to a question, and there'll probably be a lot of cases where you don't, because there are literally just thousands of things you could ask about a company. Don't try and make it up on the fly. It's usually pretty transparent. And just say, you don't know, and you can definitely get back to them after the interview. So here's some recommendations that I kind of put together as to what makes a good pitch. And again, there are no hard and fast rules here, but these are just things that I would find helpful as guidelines if you're starting to think about this at the beginning of the process. You probably want to pitch a company that your interviewer has heard of. So it's better not to pitch very obscure international companies or really micro-cap companies that they'll just have no idea what it is, because then you'll spend the first part of your pitch having to describe that, and it's just kind of not an efficient use of time. Secondly, I recommend you pitch a company in a non-technical sector that your interviewer is more likely to understand, unless you really want to differentiate yourself and you've got some specialist tech background, and that's really what you want to highlight, and that's kind of the analyst role and sector you want to cover. I'd recommend staying away from that. It's always more helpful also to pitch a company that you own. If you don't own any stocks right now, I'd recommend getting started as soon as you can. You'll pretty much get asked that in most interviews, and you don't have to own a lot of it. You can own $100, but just it's helpful to start following these companies and having a real stake in it and watching how the price moves develop over time. And on balance, it's better to put your own money behind your thesis and your conviction, and it'll go. You'll be appreciated by your interviewer. But I wouldn't say this is a total prerequisite. It's better to pitch a company that you worked on and you found on your own rather than one that you prepared for a class or prepared for some other requirement that usually comes across. And just try and keep it simple. The simpler the better. The simpler you can explain a 2 or 3 sentence thesis. Thinking about how would you pitch this idea? I don't really like the grandmother rule that people give, like how would you pitch this to your grandmother? I mean, usually investments are slightly more complicated than that, but you use your best judgment and try and keep it as simple as possible. In general, it's probably better to pick a stock that's cheap. You're always trying to pick stocks that are cheap. But when you look at the fundamental ratio, it's just easier to pitch a stock that's trading at 8 times than a stock that's trading at 50 times. Even though that 50 times stock may be a great company, it can be a little harder to make your case in this kind of interview. But don't let, if you think you found the next Amazon or whatever, don't let that stop you from pitching an expensive stock. And then lastly, I would say, in thinking about the catalyst for what's going to make those valuations converge over time, try and make it company and industry specific and not more macro-based. Don't make it like, this company is going to double if the economy improves and GDP goes to 5%, or if the oil price goes to 150. Those tend to be not very successful as overall pitches. So where do you start? Where do you find ideas? And like I said, you want to have a couple ideas going into each interview. And if you're interviewing for a long, short equity hedge fund, then I would recommend definitely pitching a short idea. Not a lot of people pitch them, and they're harder to do, I would say. So have a couple short pitches. You'll really stand out. I know when I pitched shorts a couple of times when I was interviewing in business school, I was told later on that out of 15 people they interviewed today, I was the only person that pitched a short. I think that really made me stand out. So just start doing the basics. Read a lot, be curious, be personally investing in your own account, like I mentioned before. Just look at great companies over time and try and figure out something that's not fully appreciated. Obviously, it's easier said than done, but just start following. Read what they say on earnings calls, look through their annual reports, but also just get out there. Poking around in the marketplace. Consumer companies are a great place to start. You know these brands as well as anyone, and with a little digging, you can make a really interesting pitch. In terms of generating other ideas, the big funds have an SEC requirement to publish their holdings after a certain time period, after every quarter, so you can see what they hold. And there are a lot of databases that I'm sure you have access to at school, where you can find the holdings of some really great investors. And, these are sometimes kind of stale, but lots of times, most long-term investors will have held these stocks for multiple quarters, and you can kind of see the types of companies they like, what they sold in the quarter, and you start to get a sense of what are the characteristics of great companies that you want to invest in. So here's just a sort of template for your 2-minute pitch before you kind of have the 10-minute back and forth. And it should just be really, really simple. So I'll let you read this on your own, but it's basically, this is the company, this is what it does, it trades here, I think it's worth this, and this is why it's going to get there. You also want to talk, and this is more important at certain funds than others, but really have a good sense of what you think your downside is. So you can really get into a discussion of what the risk reward is and where you think the stock is interesting. And if you don't think it's interesting at this level, would you be a buyer at a different level? You also want to have, in that first 2-minute pitch, a little bit about why the market might be misappreciating or misunderstanding something about the company, and talk a little bit about the research that you've done. So I think with that, hope that was helpful and not too rambling, and happy to take some of your questions.
Excellent, James. That was fantastic. That was a lot of information, and we've received requests from people to get a copy of this presentation because it seems like it's packed with a lot of good information. So the people out there, we have a mix of undergrads and of MBAs, and there's a lot of questions to go through, and we're just going to go through them one by one. Some people are asking about, how to get the job. Some people are asking about how to succeed in these types of jobs, and there's some questions about the stock pitch itself. So while we're still on the topic of stock pitches,
yeah,
how much research should you do you've got this great template, and you've got your upside and your downside scenarios. Are you expected? Does the person who gets this job do all types of analysis and valuations and DCFs and multiples, et cetera, for each and every company he or she does a stock pitch for? Or is it more, I think Apple's overvalued, there's too much hype, it's a short case? I mean, how much math and homework do you do before each stock pitch?
I mean, it's probably going to be somewhere in between that, and you'll have to kind of use your judgment. At the end of the day, you're competing against your peers to some degree when you're in an on-campus setting and they're doing 15 interviews a day. And then to another extent, you're trying to pitch yourself to your potential hirer, and they may not have to hire anyone. They may just be opportunistically interviewing whoever. Maybe they'll hire someone, the first, really great person they see that year. Maybe they won't hire anyone. So on balance, the more work you put in, the better it's going to go. Obviously, you have other demands on your time. You're busy with school. These things take a long time, and it's not you don't have a full-time job doing it. I would recommend you start by doing all the basic things that I mentioned, just in terms of reading and thinking critically, and then to actually, do the pitch once you found an idea that you like and a company that you think is compelling. You're going to want to spend, it's hard to put an hour on it, but a number of hours, probably a weekend, really, going through the filing, building a simple model. It doesn't have to be detailed, but you should forecast out a couple of years. You don't have to do it quarterly, I wouldn't say, for this kind of thing, but forecast out a model, run some valuations, look at some of the comp valuations, comparable companies, and then try and distill that into that one-page thesis. And to do that, it's probably going to take several hours of dedicated time over the course of a couple of days.
Okay. Another question here is about the interview practices, and you mentioned you necessarily weren't that familiar with it, but would the interview process for a hedge fund like the one you're at and the ones you've interviewed with be similar, say, in Asia or in Europe?
Yeah, like I said, I haven't. I worked in London for an investment bank for a number of years. That was an American bank, so the hiring practices were generally pretty similar to the U.S. I haven't worked at any foreign hedge funds, so I can't say for sure. But in general, the hiring process is going to be pretty similar. If you're interviewing with a fund in Hong Kong and they invest in Asian stocks, you're not going to want to pitch them a U.S. listed company that only sells products into the U.S. So just in terms of the actual company you pick, it's not a hard and fast rule, but you should make it, potentially within the realm of what the fund does if they have a particular specialty. That said, I interviewed with a fund that was mostly a credit fund, and they came to campus and they were like, listen, we don't expect you to pitch a credit idea, just pitch us your best equity idea. Do we just want to know how you think? So, it's not really them looking for, although sometimes they do use the ideas they get pitched, they're not looking for, expertise in their particular area as much as they just want to see how you think. So I don't really have any particular insights into what might be different in Europe or Asia, but in general, my sense is it's a pretty similar process.
Okay. A question here from one of our undergrad participants. What should a freshman in college, first year of their bachelor's degree, be doing now to prepare for, if their dream was to work at a hedge fund? I guess two parts to that. One, what should they be doing now? And two, what kind of jobs could they expect to get? Could they get a hedge fund job coming out of undergrad?
Yeah, it's definitely possible, and the fact that you're thinking about it right now already as a freshman, it definitely means you have a leg up on a lot of people who have no clue what they want to do, even by the time they're seniors. I would say that the best practice and the sort of most sure way that you can get a leg up is one, in your classwork. Make sure you're taking some business and finance related classes. If you're not in a dedicated business program, take some accounting, take some economics. And then for your internship, you'll want to try and make your internship as relevant as possible. So, start developing your network. A lot of funds, if they're small, they'd be happy to take someone who's really smart and really hungry and passionate about the job. And you may have to work for free or a pretty low salary, but just by emailing alumni or talking to your friends who may have worked at a smaller fund, you're probably not going to get an internship at a large, Fidelity or T. Rowe Price as a freshman in college. But there are lots of funds who consider hiring you if you pitched yourself the right way. Then the other, what I was going to say before about the most surefire way would be to get a job at a large institution as an intern. They're probably not going to take you as a freshman, but start thinking about it for your sophomore year, your junior year. Work in an investment bank, either in their investment banking division, potentially in their sales and trading division, although I would recommend going to kind of the M&A route where you're going to learn a lot more fundamental valuation and financial modeling skills. And then once you have that kind of internship under your belt, you'll probably find that a lot more investment management firms are going to speak to you, just because you've gotten that training and that seal of approval.
Okay, so in terms of experience before, and it sounds like there's really no direct route to a hedge fund. It's really built on kind of having that experience and showing a demonstrated interest in stocks and investing. So if we kind of look at from the perspective of an undergrad and the perspective of an MBA, what ideally is the amount of experience you would have? Because it sounds like ideally from, you'd want to have worked a couple of years at least in investment management or investment banking.
Yeah.
Whether if you want this job with or without an MBA. So could you maybe speak more to that?
Yeah, the typical path, and try not to get too bogged down in typical because they're very little standard path. But first of all, it kind of depends, and you have to be realistic about what kind of school you're at. If you're at a Wharton undergrad or a top-tier undergraduate business school, sometimes they do hire straight into investment management jobs, straight from those kind of programs. Whereas if you're, a history major at a liberal arts college, it's probably going to be a little bit more atypical. So you just need to think about that. But the typical route into a hedge fund has traditionally been graduate from college. You've probably done a banking internship, go back to your banking job, do a couple of years of M&A or being in an industry coverage group, or work at a top-tier consulting firm, although that's kind of less common for hedge fund jobs. And then, after a year's up, you'll start getting interview requests, talking to headhunters. It's more common that people then go into private equity, but there's definitely been a pickup in hedge fund recruiting from this sort of standard process over the last 5 or 10 years. And those are kind of, the other route typically is kind of the 2+2 to business school to a hedge fund. So work 2 years in banking, 2 years of private equity, go to an MBA program, and then try and join a hedge fund. That's kind of the typical, what a big blue chip fund would look for in someone's background. But again, I didn't have that background. I didn't work at private equity. I didn't work on the buy side before I went to business school. I found my job through personal networking. So, don't let any of that discourage you. I'm just saying those are kind of the typical routes.
Let's look at this more from an MBA perspective, because I know we have a lot of MBA students out there looking at this as well. You mentioned this 2+2 route where it's banking and then private equity and then business school and then hedge fund as some kind of an ideal route. But if you're not that ideal, if you didn't do banking before, if you didn't do private equity, maybe you were consulting, which is kind of less common, or maybe you worked in industry. Maybe you were analyst for Shell or Exxon, or maybe you worked for Amazon or something like that. If you came from one of these non-standard industries and you're in your MBA, but you really do want to get into hedge funds, what would you do then? What can you do to kind of position yourself?
It's really critical in that case, and I definitely knew people in business school who fit that mold and were able to get investment management jobs. And they were extremely impressive in both their passion for the job and the effort they put into the interview process. So, there are a lot of people who did banking at Goldman, then worked in private equity, went to Harvard Business School, had the kind of pristine resume, but, they weren't sure whether they wanted to get a hedge fund job, or they didn't know if they wanted to go back to private equity. And, you could just tell they weren't as passionate about the industry, or, didn't feel like they had to work as hard in the interview process. And you could tell that, in the on-campus round. I wasn't sitting across the table interviewing them, but, it would be apparent to someone who was. So, on the other hand, I knew a couple of guys who had worked in industry or had worked in kind of investment consulting type jobs where it wasn't, you weren't making investment decisions and you weren't doing kind of rigorous analytics, but they loved the markets and they loved picking stocks and they did it in their own time. So, you really have to demonstrate that passion, and the ways you demonstrate it are by having your own portfolio, by trading stocks, by knowing as much as you can about the market, and by working extremely hard and harder than anyone else you see on campus at making that pitch really good. And unfortunately, it'll eat up a lot of your time from some of your other activities, but those are the ways, if you don't have kind of the typical background, those are the ways you have to stand out. I mean, on the flip side, it's good because, at the end of the day, it's a meritocracy, and people are going to be looking for the hardest workers and the people with the best ideas and whoever can articulate those ideas. So, don't let the fact that you don't have that background stop you. It's really just a combination of hard work and networking as much as possible, and try not to get discouraged, because you really never know where that email you sent 3 months ago, is going to turn into a positive lead.
So it sounds like really a passion for investing is something that can, in many ways, trump pedigree and trump previous work experience in terms of getting a job at a hedge fund. But so with that being the common theme of the people who really get the jobs, does that mean that the culture at hedge funds is kind of very made up of people who are type A? They're all very into very similar. Would you call the cultures at hedge funds very homogenous, or would you say there's diversity even among the people who are passionate about investing in terms of who works there and kind of what they do outside of work, and even how they go about their jobs themselves?
No, I mean, I would say there's common traits amongst them in terms of their passion and their interest in the markets and them loving certain aspects about their job. But I would say as a whole, it's a very, very diverse and really interesting group. And, I think the people that you'll find, and the reason why the industry is so competitive to get into, and why it's so worthwhile to put the effort in to do it, is because the people you work with and the work that you'll be doing on a day-to-day basis is just some of the most interesting things that you can be doing. You can really study any business, any industry, any economy in the world in most of these funds, and it's a true meritocracy where at the end of the day you'll be judged on your performance and your ideas and the value that you create for your firm. And because of that, I mean, you just get, and because of the range of things that you can study as an investment manager, you just get a very wide range of very well-educated, but also just thoughtful people who, who think about things in very different ways. And, I work in a building that has 40 different hedge funds in it, and I see just a very wide range of people and investing styles and approaches and backgrounds, nationalities, everything. I mean, I've also worked in an investment bank where in London, which is one of the most multinational places in the world, and but I would have to say that the environment here is just a lot more stimulating. It's a lot. It just seems, it feels more pure in the fact that we're just doing analysis and making decisions. There's not really a lot of grunt work, paperwork, doing legal documents, that kind of thing. It's just a much more pure analytical job, and because of that, it just attracts some very smart and interesting people.
So let's talk a little bit about the job itself, and what does it take to be happy at a job at a hedge fund, and what does it take to be successful at work for a hedge fund?
So I've been here, since the internship, 3 years, about 2 years full-time since business school. And I think there are a number of things that you have to be comfortable with. I'm a generalist, so I work across countries and across industries, and you have to be comfortable with uncertainty and just mounds and mounds of data, and being able to really sift through the noise, but also being able to make decisions with imperfect information. You don't want to be a perfectionist in this job. I know a lot of people who've worked at banks or consulting firms. There's a lot of emphasis on being a perfectionist, having every little detail down to the decimal right. And those things will definitely help you. I mean, it's important to get the numbers right when you're doing this job, but you're going to be wrong a certain percentage of the time, and you're going to lose money, and that's just a fact of life in the business, and you have to be comfortable with that, and you have to know that you're not going to be perfect at it. There's nobody in the industry who's ever been perfect at it, and even some of the best people have had awful periods of bad performance, and that kind of leads into the next part, which is you have to you have to realize that this is an industry that there's a huge psychological aspect to it. At a base level, you need to have the financial analysis skills, and you need to have the basic ability to build models and write thesis statements and make presentations and find new ideas. But a huge part of being successful over the long term is just being confident, that you're right over the long term when you think others are wrong, and not letting a setback, get you down. Because once you kind of lose confidence over a long period of time, it just becomes kind of crushing in business, and it's tough to come back from it. And there'll definitely be periods where it'll be tough. I mean, 10 things will go wrong in a day, and when that happens to me, I just try and think about, those days when 10 things go right, and vice versa. When 10 things go right, it's not, don't pat yourself on the back too much. You can only, it's a great feeling when it does happen, and some of it may have been because you were dead right on what you thought was going to happen. But it's always important to stay humble and but also be confident, and just remember that psychology is a big part of the day-to-day job.
So it sounds like the people, to be happy in this job beyond money, and I assume that if you do well, you do make some money as well. It's really about someone who can be able to enjoy, the pure essence of the job, which is the analysis and the decision making, and also it benefits you to be strong psychologically and kind of not necessarily be a perfectionist, and not necessarily be unable to take a setback here and then.
Yeah, definitely, and I just think it's amplified versus other jobs, partially because you're judged every day by the market, which can be tough. So you know immediately, if the market thinks you're right or wrong, and that fluctuates every day. And the greatest investors are able to kind of see through that and maintain their long-term approach and their long-term confidence. And those are generally the funds that people want to go work for.
All right, James, excellent. Unfortunately, that is all the time we have for today. Any parting thoughts for our listeners before we sign off?
No, thanks everyone for your time. I hope this was helpful, and I would just say again that it's a great industry to work in. There are definitely possibilities, given the fragmented nature of it, for you to get in at various different stages of your career, whether it's out of undergrad or after banking or after private equity or after business school, or even 10 years down the road, people have gone into the industry after building up some sort of expertise somewhere else. And it's also something where you can do it on the side. You can allot 10 hours a week to building your portfolio and studying companies, and use that to your advantage when you're trying to break into the industry, and just make sure you really love it when you're going through that process. If you think that spending the weekend reading about stocks and going through 10K sounds like a really big chore, and you're not going to be happy, you probably won't be happy in the industry. But yeah, again, for the people who get into the business, I think most are extremely excited and happy to be there.
All right, thank you, James, and everybody else out there. If what James has talked about today sounds like something you'd like to explore further, and maybe talk to James personally to get personal tailored advice on how to approach this process, you can book a session with him through eVisors. The link is available. For now, we're going to be signing off. For those of you logging in through universities, the recording will be available to you through your career offices. Have a great week, and goodbye, everybody.